We are looking forward to next week. U.S. bank earnings kicking off on Tuesday. J.P. Morgan and Citi coming out with their earnings. Morgan Stanley's Betsy Graseck looked at the third quarter's potential outperformers. And the best position in her eyes, Citigroup, Ally, and Goldman Sachs. Betsy joining us now. Can you just give us a little color around your calls and why you see these firms as standing the best chance to outperform?
Hey, Lisa, thanks so much. Appreciate it. And look, the key reason is that you've got with Citi and Ally stocks that are extremely cheap, right? Their valuation at half book for Citi or 70% of book for Ally relative to the outlook we have for not only earnings this quarter, but over the next, year, 2 years, sets us up for an opportunity to outperform the group. For the quarter specifically, you've got with Citi, the capital markets, that's very strong. And with Ally, we think they're one of the only banks in our coverage that's going to have increasing net interest margins. And then for Goldman Sachs, it's a capital market story here. You've got extremely robust IPO market, you've got extremely strong debt issuance, and you've got tightening spreads. The setup for the quarter in capital markets is very positive.
Do you think that continues, Betsy? I'm really curious. The credit origination market looks like it's had a really, really strong run into the election. I'm wondering if that can be sustained beyond it. The IPO market as well feels pretty similar. Everybody rushing to get those IPOs done before the election. Post-election, is that still going to be there?
Yeah, it's a great question, Guy. And from my perspective, we think that 4Q can still be very strong. I mean, there's a couple of reasons why. Number one has to do with the election itself, and you're going to see volatility in the markets. I think we all know the narrative here around when will we know the outcome of the election, and could that be an elongated, period versus typical? Like, could we be, debating who's the winner for several weeks? That should drive some volatility in the markets, which is a positive. On the issuance side, we think that there's some risk here that, the longer the curve moves up, and I look at my colleague Matt Hornback's call for the 10-year yield to be at 90 basis points at year-end this year and 120 year-end next year, and, there's if that actually starts to come through a little bit, and we have seen a lift in the 10-year yield over the last week or so, debt issuance could pick up as well, trying to lock in what could look in a year's time like low rates today. So we think there's momentum there. And then just lastly, I'd turn to M&A, and my colleague Manan Gosalia really covers this group for us, but announcements, as you know, is up significantly, and those completions that happen on a 3 to 6 month time frame could also provide some improving lift as we look not only into 4Q but into next year on the M&A side.